Good afternoon to all of our investors and everyone else joining us today. Welcome to the webinar presenting Infortar Group's second quarter 2025 results. My name is Kadri Laanvee. I am responsible for investor relations at Infortar, and I am joined today by our Managing Director, Martti Talgre. We will begin with an overview of company's operations and key events in the second quarter of 2025, followed by the presentation of the latest news and financial results. After the presentation, we will answer the questions submitted to us in advance. If you would still like to submit the question, please use the Q&A function at Teams. Today's webinar is being recorded and will be later available at Infortar's investor website. So let's begin with the overview, and I will hand the word over to Martti.
Good afternoon, dear shareholders and investors. Infortar continues to be the largest investment holding company in Estonia. We have focused our operations on three main segments or pillars. And those are shipping, energy, and real estate. In addition to other supporting activities, we have also invested into agriculture, engineering, and printing services. Our shipping investment is Tallink, where we, for almost a year, own 70% of stake. I think Tallink needs little introduction. It's a solid and strong company, and I think after the challenging first quarter, the second quarter result was already quite strong. When it comes to energy, our main investment there is Elenger Group, which formerly was named Eesti Gaas. And this is the company which we have grown over the past 9 years into a local champion, being the largest privately owned energy company in the region. And we have continuously growing the company. So the recent addition in energy was acquisition of our Polish company, the second largest privately owned distribution grid company, which is now renamed Elenger and is actually delivering stronger results than we projected. And additionally, we have quite a substantial real estate portfolio, predominantly in Tallinn, around Tallinn, so approximately 141,000 square meters. And that makes one of the largest property owners in this area. Our focus always has been the growth, and that was actually what we promised to you, dear shareholders and investors, back in 2023 when we went public. So when we now get to our Q2 results and then keywords or key events of the second quarter. So I think the first and most important news of the second quarter is that our sales volumes reached a record 505 million euros. So this is the highest sales number we have ever delivered. Versus last year, it's approximately 2.5 times larger. And of course, part of the increase comes from the consolidation effect of Tallink, which wasn't included in our sales figures last year. But also our other businesses delivered very strong results. Energy, engineering, real estate, all segments showed nice growth when it comes to numbers. Our second quarter EBITDA was 57.4 million euros. Pre-tax profit was 15.5 million euros, which is 50% more than last year's second quarter. What is important to point out here is that due to 17 million income tax expense, what we recorded in Q2 because of the dividend payments both in Infortar and Tallink, the quarterly net result showed a loss of 1.6 million euros. But I think what the important number to pay attention to here is the pre-tax profit. As of June, end of June, our total assets reached 2.5 billion euros. During the first half of the year, we invested 38 million euros, which is also including, I think the largest investment recorded there is the Halinga new biogas plant, which is under construction. The most important transaction from Q2 was the acquisition of Estonia Farms, a leading agriculture company in Estonia, a leading milk producer as well. As that transaction was closed at the beginning of July, then there are no numbers included in our consolidated results as of the end of Q2. We continuously focus on profitability. I think it's good to see that both energy and shipping are delivering better results than in Q1, which was quite a challenging quarter. So from that respect, the Q2 has been significantly more positive. When talking about segments, then the keywords when it comes to Tallink are improving results, of course. The second quarter was solid. And also what is really good to see here is that the number of ships which didn't have a work, which were standing idle, has reduced from 4 to 2. So 2 of the larger vessels which didn't have a role have now found a solution. So MS Star is sold and MS Romantica is chartered out. So definitely positive developments. The passenger number is picking up. Cargo volumes recovery is a little bit slower, but we are looking at this positively. So end of second quarter was actually already better than a year ago. So as the third quarter, which is the main cash generation quarter for Tallink, is upcoming, so we are looking positively on this year numbers. When it comes to energy, then Q2 this year was significantly better than last year. So energy sales volumes were up, profitability was up, the sales number was up. So I think good news from energy. And when it comes to real estate, then everything has gone according to the plan. So the new logistics center for Rimi was handed over to the customer in Q2, and also the bridge in Pärnu was completed. So the other development projects are going according to the plan. So but now, Kadri, a few comments from you to numbers as well.
Thank you. So now on the screen, you can see the second quarter 2005 results. Our revenue grew in second quarter to 505 million compared to 204 million last year. So the increase is approximately 2.5 times. For the first time in Infortar's history, quarterly revenue exceeded €500 million. So the growth we continue to talk about also shows in numbers now. EBITDA in the second quarter reached 57 million, driving a 44% increase year over year. Strong Q2 second quarter EBITDA includes Tallink, but it's also worth highlighting that the energy segment performed very well, improving their EBITDA by 20 million in the second quarter. The exact numbers are available in our quarterly report appendix 1.4. So both revenue and EBITDA growth were driven by strategic consolidation and by adding new revenue sources. We are also satisfied with the quarterly operating profit, 27 million. In the second quarter, group paid dividends, 17 million. Sorry, not dividends, but corporate income tax. And both Tallink and Infortar paid also dividends to their shareholders. This tax payment had significant impact on our total profit numbers, including the effect of Tallink's consolidation. The group reported total net loss of 14 million, of which 3 million is attributable to Infortar shareholders. The book value of Infortar share continues to increase, reflecting to us strong investor confidence. And regarding balance sheet and financial position, our assets are up by 67% to 2.5 billion. Liquidity is strong, 146 million in cash reserves provides us flexibility for continued growth. Equity increased from 840 million to 1.17 billion, so 40% increase, also supporting future investments. Net debt increased due to the consolidation of Tallink, but compared to quarter and year-end numbers, it improved a little bit. So the overall leverage has decreased, which is typical for our energy segment, but also Tallink has decreased their total debt. And net debt EBITDA ratio has increased when we compared with the same period last year, but it's really due to consolidation of Tallink loans. So the current level is sustainable, and there is no risk to group's capital structure. So this is all for the numbers, and I will give word back to Martti again.
Thank you, Kadri. Regarding the numbers, just once more the comment that when comparing Q2 last year and Q2 this year, then the last year Tallink wasn't consolidated yet. So I think the first quarter, which is really comparable line-on-line basis, is Q4, because in Q3 we also consolidated only 2 months. We didn't consolidate the July result. But coming back to the presentations, so the Infortar's performance has been solid in the last quarter, and I think it's also good to see that our shareholders have been doing quite well. Since the IPO, the total return has been 83%, and also we have paid a good dividend during that period of time. And I think the good feedback here is that our number of shareholders have grown from 5,300, what we had after IPO, to 6,500, so 20% of growth of the number of shareholders as well. But moving forward to the next slide, we pointed out that the most important investment in Q2 was the acquisition of a leading Estonian agricultural company, Estonia Farms. And there has been a lot of interest around this transaction, so we decided that we're going to give a short summary what business we have entered into. So a quick recap is that the first investment in milk production was done by Infortar in Q2 last year. So that was the investment into Halinga. And now adding Estonia Farms here actually makes Infortar Agro, which is the parent company now for those two agricultural companies, one of the leading milk producers in Estonia. Those two companies, what we own, operate 13,000 hectares of cultivated land. So just to give you a bit of perspective, it is 0.3% of the total Estonian area, and it's 1.3% of Estonia's cultivated or arable land. Altogether, we own approximately 8,500 animals, and this number includes 4,300 dairy cows. The productivity of our farms is super high. So the average yearly production of a milk cow is more than 13,000 kilograms of milk. That means that we produce 160 tons of milk per day, which is 53,000 tons annually, and that is approximately 6.5% of Estonia's total milk production. Infortar Agro, the fully owned subsidiary of Infortar, in addition to those two agricultural companies, also has a 50% stake in Eesti Biogas. And that is the company, a JV, which owns and operates 3 very well-functioning biomethane plants. And we have recently also started the construction of a new biomethane plant in Halinga, the investment, the farm we acquired last year. So there are no consolidated numbers available for that segment yet, but just taking the last year numbers and having a rough kind of pro forma consolidation basically gives us an indication that the last year's total sales of those businesses was 36 million euros and EBITDA about 11. And the fact is that the milk price this year is significantly higher than it was last year. So that actually gives a ground for expecting a stronger financial result this year. Okay, but now let's move to the segment overview. So how our three segments have performed in Q2. So I start from Tallink. Our first and I think the largest part of the balance sheet as of today. So I think all you know that the first quarter was very challenging for Tallink. So I think out of our three segments, Tallink is actually the one which gets most hit by the macroeconomic situation and the geopolitical situation. So and on top of that, the fact was that 4 vessels in Tallink fleet were staying idle in Q1. So Tallink business in essence is very seasonal. Q1 is the weakest quarter, and having those 4 vessels standing still and just generating costs impacted our Q1 results quite severely. And from that point of view, it's very good to see that there has been a positive development. So when we go to the next slide, I start from the balance sheet that over the past periods, Tallink has substantially reduced the debt burden. When we go back to the end of 2023, compared to that, we have reduced the debt by 150 million euros or by 1/3. And during this year, we have reduced the debt by 50 million euros. So as of today, the long-term loan exposure for Tallink is approximately 400 million euros, I think, which is solid and conservative. That partly was also related with the reduction of the fleet. So as I mentioned before, out of those 4 vessels which were standing, 2 have found solution by today. So MS Star was sold and Romantica is chartered out, and the 2 remaining ones are smaller ones. So the impact is a little bit smaller. If you move one slide forward, so here is the seasonal split picture of Tallink. So as I commented before as well, that Tallink is impacted by macro and the geopolitical situation. However, it's good to see that the number of passengers is growing slightly. Unfortunately, the cargo volumes are not recovering so fast, but hopefully this will turn around soon. What's important for Tallink, of course, is to find solutions for all vessels which are standing still. So 2 out of 4 are completed, and people are actively working to find solutions for the remaining ones as well. And all in all, we see that Tallink is a efficient company with a very good market position. Is well invested, is diversified. So I think that when we manage to fix the issue with the vessel standing still, and when we see the recovery of the macroeconomic situation, then we believe that the performance will definitely improve. And that all actually gives us a very good kind of ground to expect that Tallink should also continue or be a good dividend paying share. So moving forward to energy. So this is a very good picture here, what illustrates the ambition to find synergies within the group, what we do all the time. So here you see how the Elenger's LNG team is bunkering a Tallink ferry. They're bunkering here LNG, liquefied natural gas. And what's important to note here is that I think in Q2 we made the first bunkering of bio-LNG, the biomethane, which will eventually turn all our vessels fully green. But going to the energy segment as such, so this is our second largest investment, and this is the company what we have organically and by M&A transaction grown from small local player into a regional largest privately owned energy company. So it's currently the company is operating in 6 markets. So Finland, Estonia, Latvia, Lithuania, Poland, and Germany. And I think Q2 was the first quarter where the Estonia share was less than 10%. So more than 90% of our business in energy is done outside of Estonia. As it's quite common for Infortar that we want to diversify our businesses, and this is something what we have done in energy as well. By today, the largest part of our energy business is the infra business. That basically means that the biggest part of the business is the regulated distribution network assets. And all those are delivering very strong performance. So also the Polish business, what we acquired in a big part falls under the regulated business segment. And all those businesses have delivered very solid results during this year and during Q2 as well. The companies what we have here are Gaso, of course, the Latvia's monopolistic distribution company, then Gaasivõrk in Estonia, which is by far the largest distribution network, and then now Rail Baltica. So altogether, we own approximately 10,000 kilometers of natural gas networks. When it comes to energy sales, so we have a growing portfolio here as well. So Q2 was, I think, from volume point of view, the largest Q2. So close to 5 terawatt hours of energy sold in Q2 alone, which is traditionally seasonally a lower quarter. So quite a solid performance. And then the third pillar, what we have in our energy portfolio is the energy production. So the biggest part there is the biomethane production, but we have also invested into solar production and then also expanding the biomethane portfolio. Little bit about the numbers. As mentioned before, we saw a very solid energy sales volumes in Q2. So just to remind that Q1 was quite weak, especially because of a exceptionally warm winter. So Q2 actually allowed us almost to recover to the levels we were last year. So I think it's really good to see. That meant that our market share in Q2 alone was 28%. And for the accumulating year, it is 23% of the market share in the Finnish Baltic market area. The bio-LNG bunkering I already mentioned, and I think looking into the future, that is getting more and more important. And that is the reason why we are also making our own investments in that area. And then last but not least, the investment what we completed at the end of last year in Poland has been delivering really good results, so better actually than we expected. So I think very positive quarter from energy. Moving forward to real estate, this is the most boring segment we have in our portfolio, but boring in a good way. So the performance has been very stable. If we compare the net operating income this year versus last year, so we see a 10% growth there. First 6 months, the growth is 8%. And I think first time, we haven't done that before, but this time in our report, there is also a kind of a a separate overview of our real estate business, how that would look like if that wasn't consolidated into the group, because significant part of our assets are leased to our own group companies. And under IFR rules, that means that a significant part of the result is actually consolidated out of the picture. So just to give a better view for investors what our real estate portfolio looks like, we have added a appendix
1.4.
Okay, 1.4. So you can take a look into that. So all in all, I think maybe important things to point out there is that the interest cover ratio is 3.6 for the real estate portfolio. Loan to value is 47%. So I think quite solid and stable segment as well. And what's important is that Infortar doesn't only develop and own real estate, but we have a very solid and experienced engineering team in our company as well. So if we move to the next slide, there are just a few examples of our recent works. So upper left corner represents the new bridge in Pärnu. I think that was a very good example of the engineering skills. So I think Pärnu municipality got a very good product and I think with very reasonable budget. The picture on upper right side is a picture of a transformator in a substation. So this transformator weighs more than 70 tons. So it's quite an exercise to move that into place. The bottom left picture is from Halinga, the new biomethane plants we are building. And then there is a picture of depot, new do-it-yourself store, which will be completed next year. And now to wrap up. So we have always said that our long-term goal has been to create a crisis-proof company. And we are working for that every day. So I think our portfolio as of today is nicely diversified across the three main segments. So shipping, energy, and real estate. And all those segments are very capital intensive. They have strong cash flow, they are stable, and they have very high barriers of entry. We are always after the growth. So we understand the growth doesn't come by itself. So we definitely want to continue our further expansion, and we definitely want to continue with our M&A activities and capital investments just to deliver the growth. I think another important element of our success is our ability to adapt. So we are very agile. We seek out for the new investment opportunities. We have strong liquidity. So when we have interesting projects on table, we can execute them very fast. And also we want to keep our decision-making process very fast. So although we have grown into quite large companies, so we are still capable of making very fast decisions and doing very fast transactions. So like we've been joking that investments and company acquisitions are a little bit like a business as usual for Infortar. So all in all, I think that the most important thing for a good company is that the company has a stable and solid cash flow, and this is what we are aiming for, and this is what we have been delivering, and that actually gives us a tools to continue with the growth and also pay solid dividends for our shareholders. So I would wrap this up here.
Thank you, Martti. So we have received several questions, and we will start by addressing those who submitted the questions before the webinar. First question: how has the sales and infrastructure business been performing in Latvia, and why don't you talk about Latvia anymore?
Latvia has been delivering very strong results. So similar a little bit to Poland, that the performance has been better than kind of we planned initially, and as they have been very stable and solid. So like we're joking, we're working with the problems. So as Latvia is not a problem or is not a challenge, So that's why we don't maybe cover that so much. But Latvia is a significant part of our cash generation in energy segment and is delivering very solid results.
Okay, how satisfied are you with the developments in Polish market?
As I mentioned before, the first 6 months results in Poland have been solid, nicely in line with our budgets. Actually, they have delivered a little bit better results than we forecasted. So I think we have a very good team there. We of course, pay a lot of attention to them. We are very interested what they're doing, and I think the team has been integrated quite nicely. So they are rebranded as of today. So I think that has been very good. The whole transaction, looking back.
Thank you. So what is the long-term impact of consolidating Tallink on Infortar's profitability and cash? Do you regret Tallink's investments?
I think this is not the first time when we have got this question, but I think fundamentally Tallink is a very solid company. So they have a very solid market position. I think they're well invested. They have very good assets. As of now, Tallink is the part which kind of feels most severely the macroeconomic and geopolitical situation. But still, I think that Q1 was really challenging. But I think Q2 gives us optimism. The Q3 usually is the strongest quarter of Tallink. So we believe that Tallink management and the whole team is doing a very good job. I think right now the fleet has been optimized. 2 large vessels which were standing still have found a solution. So and also I gave an overview of the balance sheet development. So Tallink has reduced their interest-bearing debt significantly. So we believe that it's a solid company with strong cash flow with quite reasonable leverage. So those all are the ingredients of a good dividend payer. And I think that from Infortar shareholder point of view, you felt that in your pocket that last year we passed through Tallink's dividends, and that was €1 for a share, and this year it was 1.5 euros per share. So all in all, I think we know Tallink so well, and I think that when the fleet gets optimized, when the macro situation will improve, I think it's going to be a very good cash flow.
Thank you. Can you comment on any future plans regarding biogas sector?
Well, that is a very natural part of our business. So we started dealing with this 6 years ago. So I think we have quite a good experience when it comes to operations. Where do you make money? What's important there? And this is the reason why we grow the portfolio as well when it comes to production facilities. What is also, I think, a positive thing for the future is that now when the marine segments is getting more and more regulations when it comes to green fuels as well. There is going to be a role for biomethane on vessels as well. So from that point of view, it is like a cheap hydrogen or cheaper alternative for the hydrogen. And as we have invested into agriculture as well, this is very logical. So this is part of big synergy picture that we have our own consumptions. We understand where the trends are. We can produce that efficiently. We have farms where we have the raw materials. So definitely we continue with the growth in that segment as well in all geographies. So far we have done that basically only in Estonia.
Thank you. So now we have received some more questions. Would you please provide an EBITDA split in energy segment between energy sales and energy infrastructure in Q2?
We haven't provided that split. So and that's something what we are potentially discussing, that maybe in the future we might do that. just giving you a flavor that as of now, the bigger part or more than half of the EBITDA is generated in infra. And I think that from our point of view, and maybe also from the investors' point of view, that is the good thing that the regulated part is the bigger part of the EBITDA. So we have heard the question before as well, and we have a discussion that maybe from next year we might start kind of splitting that as well. But so far we haven't done that, and as that is not included in our public materials, we can't give you more than just the fact that energy infra is generating more than half of the EBITDA.
Both companies, Elengar Polska and Gaso, also are ready with their annual financial numbers as a separate companies. So this is something to look at as well to understand better what's the profitability coming from there.
I think that if any one of you is interested, I think that maybe those reports could be available from Kadri.
Yeah, so, you can ask and I can share. Elengar Group market share increased in second quarter 2025 to 27.7% in Finland Baltic gas market. Would you please elaborate a bit on the reasons behind the market share gain?
I think that the main, 27 or 28% in essence isn't nothing, isn't a level we haven't seen before. So, first it's quite kind of seasonal, varies between quarters. The Q1 drop was mainly related with the fact that the gas consumption was lower and kind of structurally the bigger part of the gas was consumed by those players who imported their own gas and produced power from that. So I think it's more like a normalization of the situation in the market. So I think that when you look at our 24 total, it was 24%. So it always varies a little bit between different quarters as well. So but I think if you would like to point out kind of one single reason, so I think the biggest reason was the fact that the previous quarter the gas consumption was so low, and actually Q2 from gas consumption point of view was a little bit higher than historically. So kind of the open market or accessible market where we could take a stake was bigger.
Okay, so could you please add some flavor to Elengar Polska EBITDA in H1?
A little bit the same thing that we haven't been splitting that, and I think that most probably if we would start splitting more the quarterly numbers, we wouldn't go into so much to the regions anyway. So as I said before, they are delivering strong results, a little bit better than we expected in our plans. So but yeah, unfortunately we wouldn't give you any more concrete numbers here in this stage.
Yes, and also could you please add some flavor on margin energy sales? It seems that they are recovering a bit slower than expected.
No, I think that when you compare the energy sales margins in Q1, so this was really a challenging quarter. So I think Q2 is more like normalized market. I think the market as such is adapting with the new situation. I think that there is no excess of gas in the market. So I think that now it more reflects kind of the acquisition costs and things like that. So the fact is that when we compare the gas sales margins, what we had back in 22 and 23, those were extraordinary times. So I think this is not a realistic way to expect that those margins would go back to those levels. But in a big picture, I think that what's good to see is that when you look at the total performance of our energy portfolio, so we don't have those one-offs or high earnings from gas sales margins anymore, but we have compensated that with the significantly increased infra business, which is pretty much kind of covering those reductions from the gases, but now kind of the cash flow generation is so much more stable.
Okay, so it seems that we are done for now and all the questions are answered. Thank you to everyone who joined us today and to those also who will watch the recording later on. If you have any further question, please be kind and write to me, or you can also use your phone. And this is all for today, so thank you.